Welcome to the Caffeinated Traders Lounge. On this channel, we discuss everything from technical indicators, how to get better entry setups, trade management, risk management, and so much more. So by the end of this video, if you gain some value, hit that thumbs up button, subscribe to the channel, and I look forward to seeing you in the next one. Now, let's jump into today's video. All right, welcome back to the Caffeinated Traders Lounge. Today's video will be looking at the Relative Strength Index, or better known as the RSI. So many of you may already know about the RSI and what it looks like, maybe even what it does. But today we're going to go over a few more things that maybe you haven't come across yet that can give you a better understanding of this indicator and possibly even give you a reason to add it to your strategy. All right, so if that sounds good to you, stick around. And hopefully we can get that done for you. So first and foremost, what is the RSI? Well, the RSI is a momentum indicator that displays the magnitude of recent price moves. So simply put, it shows trend direction and pace of swings. All right. Next, it is an oscillator that shows overbought and oversold conditions. And just for some general knowledge, the RSI was developed by J. Wells Wilder Jr. in 1978 and was first introduced in his book, New Concepts in Technical Trading Systems. All right, so let's jump over to TradingView quickly just to see what this indicator looks like and what settings options we have to play around with. All right, so this is TradingView. Which if you don't have an account, I would highly recommend you get one. It's probably the easiest and most functional platform to chart on that I've come across. I'll leave a link in the description below for you, but regardless, this is how you would get the indicator on your chart. You click up here where it says indicators, click that, type in RSI, grab the relative strength index right here. And then once you have it on your chart, there's a few things that you can do to play around with it. So they've recently just updated it. As you can see now, there's two lines. There used to only be the one line. And I'll show you what those are. So your first line is going to be the RSI, this black line that you see toggling on and off here. All right. The next line is going to be a moving average based on that RSI right there. And then they also have an option for Bollinger Bands, which I'll show you in a second. They have the RSI upper band and the lower band. So this is going to be your overbought and oversold signals. And then you have your 50% line down the center. Okay. So you can adjust those if you want. You can go 75 to 25 and make them a little bit stronger signals if it does go below those, but we're just going to leave it at 70 and 30 for now. But you can now, they never had this before, but now you can change it to a different time frame. Like right now I'm on the 15. If I wanted to look at the 1 hour RSI, I can do that. If I wanted to go down to maybe the 5 minute, 4 hour, whatever you want to do, you can play around with it. But then you have your period. So how many periods do you want to look back for your RSI data? You want to look back 14, which is the standard, or use a Fibonacci number, the 21. This is the one I personally use. For the source, you can keep it on the closing price to grab data from the closing, or you can use open, high, low, close divided by 4, high, low, close, or the high, low divided by 2. And you'll see once I click it, it will change the RSI a little bit. Not much, but it does change it. Okay. And then for that RSI based moving average, you can keep it as a simple moving average. You can go to a exponential, the smooth, weighted, volume weighted. But this is the only one that's going to be slightly different. This is the actual Bollinger Bands. If you put this one on, it will keep the moving average, but it'll also throw on the Bollinger Bands on top of that RSI. So then you could see it's the same thing as if you were to throw it on the price chart. It just does it with the RSI. And you can see you would potentially have a signal to sell here as it came outside of the Bollinger Band. All right, and down here as well, signal to buy potentially. But those aren't full signals. You do need other confirmations, right? But anyway, that's the gist of it. That's what it looks like. That's how you get it on your chart. And those are your options to play with. All right, so now let's move on and get into what this thing can really do. And let's look at ways that it can be used. All right, so first thing most traders think of when they hear of the RSI would be determining overbought and oversold conditions in whatever asset they're looking at, whether that be Forex, stocks, commodities, doesn't matter. It can be used for all of them. It's all in how you use it. But as you saw when I just showed you it on the chart there, your traditional levels to look at when trading the RSI is 70 for overbought right here and 30 for oversold. All right, these are the standard numbers. Like I said, though, you can play around with it if you want. But this means that the plotted line, this one here, the actual RSI, when it goes above 70, it is overvalued at that price, or technically overbought. At the same time, this is true for when it goes below the 30. It would be considered undervalued and oversold. So price could potentially move up from that level. All right. But that's not to say that just because it has crossed that, it is a signal to buy or sell. It simply means for the time being, price is likely not to rise further when overbought or likely not to fall further when oversold. In trending markets, price can easily just hang out and consolidate for a while until the RSI reverts back. And the price just continues in the original trend direction. So you may not always get an actual reversal. It may just hang out there for a bit and then continue back lower if it was already in a downtrend, right? So you got to be careful using just that as a signal. The RSI does work better when you use other signals for confluence to get a better entry, right? All right. So the next thing the RSI will display, which you may have heard of, is finding divergences. So divergence simply means that the price of the asset and the indicator are moving in opposite directions. There are technically 3 different types of divergences you can spot on your charts. So the first one we have is regular divergence, and then we have a hidden divergence, and third, but the least probable and the lowest strength signal, I guess you can get, is going to be your exaggerated divergence. So first, we have our regular divergence, which shows price making lower lows. So this is going to be your bullish divergence. So price is likely or said to want to revert back upwards and be a bullish move when you have price making lower lows and the RSI making higher lows. So you can see price came down. We had a low here, moved up a little bit, came down, made another lower low. But on the RSI, we saw our low here, and then we made a higher low. So price and the RSI are now diverging. All right. And the same is true for bearish divergence. Price is making higher highs while the RSI is making lower highs. So basically, this is signaling that, well, the indicator is signaling that it's actually losing strength in this move while price somehow still made it higher. All right, so now for hidden divergences, we see the opposite. In a hidden bullish divergence, we would see price making higher lows, right? While the RSI is making lower lows. So they're still diverging. There's still a difference between them. However, it's the opposite. Now we have higher lows with lower lows on the RSI. And then again, the same would be true for bearish. We're making lower highs on the price chart and higher highs on the RSI. All right. Now, the last one, like I said, this is going to be your lowest probability, but they are still a divergence. All right. So here you have price making equal highs or equal lows, while the RSI in a bullish would be making higher lows and a bearish making lower highs. All right. So take a screenshot of this if you want. This is a good example here for you to get to know these. And if you do need to, you can look back on them to see what's actually happening on the chart when you need to. All right. So now moving on to the final way that we'll be discussing today, that it can be used is to determine trends. All right. So everyone talks about using trend lines on the price chart, right? Looking actually on the chart, looking for trends there. But what most people don't realize is you can actually look for trends on the RSI using the highs and lows to draw trend lines, looking for potential bounces to continue the trend or crosses to signal trend reversals. And also the same could be true for a break or cross above the 50 area, above or below the 50 area. This could indicate a shift in the market and a potential trend change. All right. So another way to look at the RSI for trends is to understand that a reading above 50 would signal that the relative strength is bullish since it is in the top half. And the opposite again also applies if it's hanging out below the 50 area, which would be signaling that the relative strength is currently bearish. All right. So as you can see here, we kept bouncing above that 50, right? As we kept moving up. So the relative strength was bullish, and we could see that as price. Yeah, it made its little swings here, but it was going up. And then the same is true for down here, right? Price stayed below the 50 while, the RSI stayed below the 50 while price kept moving down. All right. So now let's get into this picture we have here. This chart I have posted up actually shows a lot in one picture. So let's break it down a little bit. All right. So the first thing to note is on the far left, we see the RSI giving us an oversold signal. All right. Right here, we got an oversold signal. This is not a signal to buy just yet, but we will put it on our watch list because we know that there could be a reversal in the near future. All right. So the next signal we get is a bullish divergence that formed after being undervalued and oversold. All right. So after it made this next low here, we look down at the RSI and we have a higher low right there. So now the RSI is making higher lows while price is making lower lows. That is our regular divergence. All right. The next thing we have is the trend line above price that gets broken. All right. So price breaks it right here. So this is signaling to us again that the trend may be changing here. And yes, you could buy if you wanted to, because you already had the oversold, you had the divergence, and then on price chart, you have the trend break. All right. But if we look back down at the RSI, we have been following a trend there as well, right? You can see we're following the trend here. And if we wanted to, we could actually wait because we see that it's actually fairly high over here. And because it's been following this trend, we could wait for the RSI to come back to this trend line and then enter right there. And as you can see on the actual price chart, it broke through that trend line and then followed it all the way down until the RSI actually met that trend line. All right. So this would be our entry point for a long position. I mean, like I said, you could have entered here. However, you would have saved yourself a little bit of heartache and caught yourself a few extra pips and had a tighter stop loss for less risk here. Or if you wanted to risk the same percentage, you could have actually because you had a tighter stop loss, used extra units, extra lots, whatever you trade. And then once this did go up, you could have made a little bit extra money, right? It's always a good thing. But anyway, after entering, we see price follow the trend line while the RSI does the same until it reaches overbought. So this is where we would begin looking to get out of this trade, right? After it comes up into this overbought signal here, we would begin looking to get out of this trade. These ones here, you may potentially have gotten out. I don't know. It's really up to you, but you could have held out as price was following this trend here. And then we have a trend here, right? So this was our strong overbought signal here. And then the next thing we would note is this break right here. All right, the break of this trend and the break of this trend on the RSI. All right, so now this is where I would for sure get out of this trade, out of the long position. Maybe not here, because sometimes the RSI does come back up into the overbought if it's a really strong trend, right? Like I mentioned earlier when we were discussing the overbought and oversold signals, just because it came up there doesn't necessarily mean it's going to reverse. All right, so you want to use other signals. I would have waited for this break on the RSI and the break on the trend line on the price chart. That would have been our signal to close that trade. And we could actually go short from this position. All right, because we do see trend break here, and the overbought signal. All right. Another thing too to note, it also did break below that 50% line, which I mentioned as well is a potential for a shift in the market that we are now going short. All right. So we enter into that short position and we ride it all the way down until it gets oversold. All right. So we see it get oversold here. And as you can see, it stayed below that 50% the entire time it came down. As we got a little bit closer down to the bottom, we see it follow this trend line here, right? Then after we got that oversold signal, boom, we broke the trend here. And then price did make its way back up a little bit. You can use other things too, right? You had this little double bottom here with oversold. We had that exaggerated divergence, right? The RSI making higher lows here after it broke, with price making equal lows here. And once it broke, we could have exited our short position. All right, so that pretty much sums up all the ways that we can use the RSI. So let's throw up a blank chart and see quickly what you can find. All right. So tell me what you see here. I'll give you a minute. Pause the video if you need to. Find all the things we discussed in this picture here. All right, you ready? So first, we got a couple overbought and oversold signals. Okay. First one here, we have an overbought signal. You can see the RSI overbought there, oversold, and overbought again. All right. Hopefully you saw those. Now, next we have divergences. Okay, so right there and there, we get our overbought signal here. The next swing, right, we now have a lower high on the RSI while price made higher highs. Okay, and then same is true for this one. RSI making higher lows while price made lower lows. Okay, the next thing we see is the trend line. Okay, price is following this trend right here. And then we now have three different signals. We have our overbought, our divergence, and a trend. So we have three confluences. Once it broke there, we could have entered into a short position until it got oversold. Simple trade, 3 reasons to enter, and it worked out. All right. Now, if we wanted to, we could also throw up this trend line here. And yes, it broke earlier. You could have entered here, which would have given you a lot better entry than the actual trend on the price chart. But then you would have had to sit through this. And I don't know too many people that can sit through choppiness like this without exiting the trade. As this was forming, you may have been looking at this consolidation area as well, thinking that it's going to follow the trend back up, right? But if you were looking at the RSI, you would have seen it broke through here, stayed below the trend. So now stayed below the 50%, stayed below the trend, and then fell further. All right. So the RSI may have given you a lot better entry and gave you reasons to stay in the trade as well, rather than taking your profits too early. All right. So now the next thing as well, we have on this trade, we have the trend following this way. We get our oversold signal. We get our divergence. Once price breaks the trend line, we can now enter this trade until it gets overbought. All right. So now let me know in the comments below if you were able to see all that at a quick glance, or if this is something you will have to study a bit more to train your eyes to see it. I know it won't come naturally. I imagine you will need to work with this a little bit to actually spot them out quickly and use them profitably. But also, I mean, let me know if there's something I failed to mention in this picture that you did see, because I'm sure there might be. I'm not perfect either. All right, so now that all the fun parts are kind of done, let's take a quick look at how this thing is actually built. All right, so how is the relative strength index actually calculated? Well, it gets broken down into two parts or two formulas. I won't bore you with reading them out. You can pause the video. You can look through these if you want. But in step 1, as the number and size of higher closes increases, the RSI will rise. And as the number and size of lower closes increase, it will fall. Step 2 simply just smooths this result. All right, so that concludes this video of the relative strength index, famously known as the RSI. I hope you enjoyed this video. Hope you learned something today. And if you did, give this video a thumbs up. It would be greatly appreciated. Helps the channel a lot. And also, if you want to see more videos like this, subscribe to the channel and turn on your notifications so you never miss a video that could be the one that propels your trade to the next level. All right. And let me know in the comments below if this is something that you do see yourself using. Backtest it. See if it works with your strategy, with other signals that you use. And this could give you a little bit more confirmation and a little bit higher probability that your trade will actually work out, right? So let me know what you think about it and whether you're actually going to use it or not. All right, with that, hope you have a wonderful day. Stay safe, happy trading, and I'll see you next time.